Hello, let me share with you our latest offering, our trend following PMS. The first question that comes to mind, what is trend following? So let me share with you in a very simple one line, what is trend following? Trend following is nothing but buy strength and sell weakness. Let me share with you the genesis of this thought process. Well, I entered the stock market in the year 1991. This was the famous Harshad Mehta bull market. And that's when I first understood the power of trends. I encountered a stock called ACC, a very famous company even today. But the kind of movement and the kind of wealth creation it had really left an impression on me. I really understood the power of trends, and all my life, post that, all I have been looking for is trends, because ultimately it's trends that create the outperformance. It's trends that create the large money. It's trends that make big wealth, and that's what I'm looking for. Thanks to that bull market, I was able to fund my education. I went abroad. I did a master's in international banking. I came back to India and joined Birla Sun Life. That's when I experienced the second big bull market of my life. This was the so-called IT bull market. Having studied abroad, I understood the power of technology, and I participated in one of the legendary stocks at that time was Wipro. Clients made a lot of money. I mean, it was a phenomenal ride, and it was a full expression of a trend, what I was looking for. However, very early in 2000, this trend changed, and we found that in 2 weeks, one gave up months and years of profits. And this just did not happen to this stock. This happened to many other tech stocks and most investors. And that's when I really realized that, hey, you know what? I know what to buy and when to buy. But like most investors, I didn't know what to sell and when to sell. More importantly, when to sell. That's when I got back to the drawing board and realized that, when markets fall, they fall very fast. And the time it takes for news to come and the time it takes for you to react, most of the profits are given back. The way to navigate these exits effectively was through doing quantitative work, risk management, and a little bit of technical analysis. So I combined and went deep into these studies and built the second arrow in my armory, which is not just how to identify and buy trends, but also how to sell them. And I think that is a knowledge or a piece of skill set which is even missing today for most people. Subsequently, in 2007, I got associated and joined Rakesh Jhunjhunwala at Rare Enterprises, legendary investor. You all heard of him. The famous Titan story you all know of. Yes, Titan was a great stock, but the beauty was, for people who know him well, was the way he navigated it, the way he pyramided it, the way he stood. And that is really the hidden but the more important part of trend investing and creating wealth. So for me, working and associating with Rakesh ji was this very big learning curve of the ability to combine good stocks with the trends in the market. And that's why I say that he is the master of trend investing. With his blessings, in 2017, I started Marathon Trends PMS. The first few years was a bit of learning, especially handling client money and the dynamics of the market from a different perspective. In 2023, all this learning was condensed and put through our new offering of trend following, which I'm really going to share with you. Ultimately, stocks are driven by earnings. And the first step or the driver of stock prices is to look for companies which have growth in earnings. So we look at three variables, which is sales growth, profitability, and shareholder returns. And we just don't look at them for the short term. We look at them historically, because we feel that companies that have been able to successfully deliver over a period of time continue to do so because managements have that intrinsic ability. There are about over 2,000 companies and nobody can analyze all that. But by creating these filters, we come down to a handful of stocks. And we call this quality. Most people think quality is a famous name or a famous brand. Not really. Quality is all about companies that are able to consistently deliver growth, whether in top line, bottom line, or shareholder returns. And that is the first step in buying strength. The second part of the equation, and which is very unique to what we do, is that we also look for strength in trends in prices. And we also look at this in three parameters. The first is we look for strength in price. Second is we look for momentum. And third is for risk. Just as I want to see myself navigating a boat where I am with the currents, I want to navigate the boat where the wind is behind me, and I want to navigate a boat in which the risk I take as a captain is limited. So what we do is actually combine these two skill sets and are able to identify strength. Sell weakness is actually just the opposite of it. We all see when companies go through difficult times, when earnings start deteriorating, the market starts punishing them. But the problem is that we find very great difficulty in executing it. Execution or selling is a very, very difficult thing. And we never fail intellectually. The failure is emotionally. And when I started in 1991, 92, if you look at it, the Sensex, the BSE Sensex has 30 stocks. Today, fast forward maybe 30 years later, only 5 stocks from the Sensex are still a part of the Sensex. 25 stocks have been eliminated. In fact, many have given you negative returns also, surprisingly, over a 30-year period. Most have actually underperformed. So trends keep changing. Businesses have cycles. And as an investor, it is my job to be able to navigate your ship through these changes in currents, changes in winds. And that is why we think that selling is very important. One of the most popular theories of evolution, which is survival of the fittest. And that is exactly what investing is all about for us. Buy strength, that means buy what is strong, which will survive, and sell weakness, which means eliminate what will not survive. And that is why I think that there is merit, because there is a very, very fundamental theory of evolution which really backs our investment process. So this may all sound simple, but the challenge that most people face is that it's very difficult to do. And I always reflect on what is that thing, what is that emotion that makes it very difficult for people to sell. And I think that emotion is very well put out in the words fear of missing out. We also call it as FOMO. So what is the fear that we have? The fear we have is that the fear of selling winners. That means if a stock is doing well, we fear selling, because if we sell it, maybe the stock continues going up and we leave profits on the table. The second is the fear of selling at a loss. We sometimes really fear selling at a loss because we feel that, if I sell it, I book my loss and the stock goes up. That again feels horrible. So the fear of FOMO is a very, very big emotion. How we really overcome this is that, as I said, we are very quantitative and disciplined in selling. We have very well-defined exit points. And these exit points give us absolute clarity that this is the point where we should sell. And more importantly, is we look as investing as a process. Yes, we will all sell something and the stock may go up. It happens very often. But the important thing is that with the capital that I have raised in selling, I could redeploy into something else which may give me better returns. So when you view investing as a process and not an ego game of trying to sell in perfection, you realize that you overcome this resistance in being able to sell. selling effectively or optimizing exits is a very big strength which comes from our technical and quantitative approach to investing. So finally, I just want to summarize what our process is. We employ technical analysis on fundamentally good stocks, and this really enhances profitability. In fact, very often people spend a lot of time conflicting or comparing these two styles of investing. We really do not do that. We try to pick the advantages or the positives of both these thought processes and we integrate them into our trend following PMS. Well, you have been hearing a lot about the India decade coming up, and truly so from the projections that you see from a lot of the top broking firms. If the economy plays out, the stock market is going to reflect it. And we think that the opportunity coming in the next few years or next few decades is massive. And we think that our strategy is very, very well geared to ultimately be able to monetize this effectively, to outperform this, because we feel that there are a lot of trends that are going to play out in the coming few years, in the coming few decades. And this approach is really going to work. You know, there's another beautiful line by Albert Einstein which says that if you want different results, you have to do things differently. We do things differently. Our approach is different. And when you look at our portfolio, you will find that we have a different mix of stocks. And that is really what sets apart. And that is why I feel that you should be a part of our journey in creating wealth through our trend following PMS.